you're a real estate investor or you're just curious about creative financing options for your rental properties, you've probably heard of the DSCR no income doc loan. And so if you're looking to purchase an investment property vacant or occupied, if you're looking to pull cash out of your investment property vacant or occupied, and you cannot or do not want to show your tax returns, your pay stubs, your W-2s, your IRS tax payments, or lack of IRS tax payments, then the DSCR loan is for you. So I feel like today is a good day for class, you guys, because number one, in this video, we are going to hit 6 key points about DSCR loans, but since this is class, it's appropriate for me to introduce myself. So I am April. I am a direct mortgage lender, and I freaking love being a lender. I love it because it's one of the few things in finance that rewards you for showing personality or having a personality, okay? Because I've been in finance and accounting for about 20 years, finance, accounting, real estate for almost 20 years, and which is so wild. I've been out of college since 2008. Go IU, Hoosiers, okay? Finance degree, MBA. I got into real estate as a realtor, and the biggest thing is 1000% my finance and accounting background helps me to navigate your loans so much better than others. But you don't need any of that, honestly, okay? You need to be able to problem solve and to understand and interpret guidelines to where you can get to a yes. Even sharing this video, the point is to give you guys some more meat on the bones. That way you can have the information you need and take your time and let it simmer, and then reach out to me if you have any questions or if you would like to move forward. So without further ado, let's get into this video. So the 6 things we're going to talk about in this video is, number 1, what is a no income doc loan? Number 2, it's not hard money. Number 3, is a prepayment penalty necessary? This question comes up all the time, often, I should say. Number 4, can you put this property in your LLC? Number 5, what are the deal breakers? And number 6, yes, there's a small cost to get in this mortgage, just like there's a cost to get in an FHA, a VA, a conventional, etc., etc. So the first thing is, what is a DSCR loan? So DSCR stands for debt service coverage ratio, and it is a no income documentation loan. It is asset-based lending, which means we use the property itself to qualify you. So, unlike where other loans, we use your W-2s, tax returns, pay stubs, etc. to qualify you, we just base it on the property's income potential. So, AKA, can this property generate enough cash flow to cover the mortgage payment? If yes, then good. Now, the DSCR calculation itself. Now, let me take a step back. For example, if your property brings in $2,000 a month in rent and the mortgage payment is $1,600, that means your DSCR rate, the debt service coverage ratio, is 1.25. Most lenders want you to have at least 1.0 ratio. Okay. Now, there are lenders, including myself, who we do no ratio DSCR loans, which means I'm sure someone's thinking, like, why would someone do a deal where the rental income does not cover the mortgage payment? In some markets, it makes more sense because us, the bank, we are calculating your projected rental income based on a 12-month lease. In some markets like the Jersey Shore, you're probably not going to get a lot of rent, okay? You're probably not going to get a strong 12-month lease. However, if you do home sharing, if you do Airbnb, I've had clients where they're like, okay, $50,000 rental income in a year, I can make that in one summer. So depending on the strategy or the approach, it may not look like a good deal, but if you have a strategy that is a good deal, that's what matters if it works for you. So like I said, long story short, we can still do your deal just based on your, every scenario is different. Connect with your lender, me. Number 2, it's not hard money. So let's clear the air, okay? It's not hard money. DSCR loan is not hard money because hard money is typically not typically, hard money is short-term financing. It's something for you to get in, get out. Think fix and flip. Think 10, 11, 12% rates and a bunch of points, okay? DSCR loans are typically 30-year mortgages. You can get a DSCR if you want to do maybe 20 years, 15, but don't hurt yourself. It slow and steady wins the race, okay? Number 3, is a prepayment penalty necessary? The short answer is no. And of course it depends on your lender, but a prepayment penalty is a fee if you decide to pay off your loan early, which includes if you sell your property, of course, or if you refinance your property. Now, many DSCR loans use a structured deal like a 5-4-3-2-1, which basically means if you refinance or sell in the first year, then you owe 5% of your outstanding balance. And why do lenders use this is because they are betting on your property's long-term income, which income for the bank is interest over several years, okay? And so here's the thing about prepayment penalty. I've seen clients where they're like, their first instinct is, I can't do this. Why do I have to? Like, it's like, I think it's a mental thing because it's another restriction, okay? But like I said, if you are a true buy and hold investor, unless the rates drastically drop where you're like, oh my God, I just refinanced last year, but I got to refinance again because rates went from 6.5 to 3. Yeah, you should refinance. But the likelihood of that happening, as long as you're going into your deal with making financial sense and your intention is to hold that property, don't worry about prepayment penalty. But also keep in mind that prepayment penalties are negotiable. So it's not something that you can't, give a little, get a little with your lender, okay? And also keep in mind that if you take the prepayment penalty or a prepayment penalty, because there's different ways to structure it, you will get a better mortgage rate. If you don't want the prepayment penalty, or if you want a softer prepayment penalty, then you will have a worse mortgage rate. Number 4, can you put your property in an LLC? Yes, absolutely. One of the biggest perks of DSCR loans is that we prefer for you to put it in an LLC or corporation because they are business purpose loans. Now, and sometimes we require you to do that. And it's protection for you. Keep your assets separate from your personal, keep your assets separate from your other assets, etc. Check with your attorney on how you should set things up. But let me say, as a banker, because sometimes LLCs put people in chokeholds, as a banker, you could go under contract tomorrow and create your LLC tomorrow. It's free yourselves from the 1 or 2 people who ask me this a year. Free yourselves from getting the LLC logistics. It's not a big deal. Now it can become a big deal if you're doing a refinance and everyone and their mom is on your LLC. That's something, once again, you want to talk about with your lender. Number 5, what are the deal breakers? So yes, DSCR loans are flexible, but they are not for everyone. So first, it has to make financial sense for you, and it has to make financial sense for the bank. So things like, what is the debt service coverage ratio? What is the loan size? And let's talk about that. Banks do have loan minimums. Why? Because they say it takes like 12 people to close a mortgage. Okay. You got your processor, underwriter, loan officer, title person, funder, closer, insurance, appraiser, etc., etc. So, if it is like, a $50,000 property, it may make more sense. Not may, actually you'll be required if there's a loan minimum. It would make more sense to do a 401k loan, get a loan from a family member or a friend, do a personal or business line of credit, and just it would not make financial sense sometimes to do a super, super, super low mortgage. I'm just saying, and I'm the type of lender, like if there is a completely better deal, a completely better route to go, I like to sleep at night. So I will tell you so. Secondly, you need a decent down payment. Typically, investment deals require a 20 to 25% down payment. So let's just clear the air. There's no 5% down payment, 10%, okay? It's a luxury thing. I don't know if I said that already. You don't need an investment property. It's show me the money, okay? That is the starting point. Now, if you want to do things like house hack, we can talk about that, okay? If you have a house and you want to buy another house to live in and rent that house out, and you can make that your departing residence of rental property and still be able to do a 5% down payment on your next deal to circumvent this whole, I guess, well, that's another form of house hacking, okay? You can do that, but there's no way around DSCR loans. You can do it or you can't. That's all to it. It's a harsh reality. Also, another thing you need is a decent credit score. Now, it's asset-based lending. We don't look at your debt. We don't look at your income. However, we do look at your credit score. Why? Because we got to make sure you pay people back. That is the biggest thing. You can have the down payment. You can have an amazing investment property that we're like, oh yeah, the cash flow is great. But if your credit score is in the trash, forget it. Forget it. Also, you need to be a homeowner on your primary property, the property that you live in. Now, you can get an exception for this. A few years ago, it was not a big deal for whatever reason. Actually, I know why. I'm sure it's because of fraud and risk. That's really the bank. The bank cares about that a lot, which makes sense. Okay. So you have to already own a home, which, like I said, and actually financially, I've had one or two clients who were investors before homeowners. But when I say they were aggressive investors to where I get it. They took the chance on them. They took the chance in real estate and they really just figured things out. And then they said, okay, now I'm going to buy a house instead of renting. But most people are not like that. For most people, it makes sense to buy a house to live in before the DSCR route because you can bring less money to the table, Lastly, DSCR loans are for single family homes, 2 to 4 unit. We can do 6 unit on up. I do provide commercial financing, but it cannot be on things like land, manufactured housing. It can't be for a shell, it can't be like missing windows or fundamentals like a HVAC. It has to be habitable. Why? Because DSCR loans are rental loans. It's for when you close, your intention is to have a tenant occupy that property. And so, listen, it doesn't have to be something that you will live in. It doesn't have to be the most pristine. It just needs to be habitable. Number 6 what's the cost to getting this DSCR mortgage? So, just like your FHA, your VA, your conventional, your bank statement loans, I got P&L only loans, I got 1099 only loans, I got a bunch of loans, okay? There's always going to be an underwriting fee, an appraisal cost, title cost, insurance cost, etc. Property taxes. And I like to be conservative when it comes to closing costs. So typically 3 to 5% of your purchase price should be your projected closing costs. And also keep in mind, DSCR loans is a non-QM loan, which basically means it is not backed by Fannie Mae or Freddie Mac. So your rate is going to be 1 to 1.5% higher than a regular loan. Listen, 1 to 1.5% for flexibility, 1 to 1.5% higher when, I'll just keep it there for flexibility, okay? That's not bad, especially right now. A lot of my investors are pulling cash out. Is how many other areas or places you can easily pull a few $100,000 and you're only providing a couple documents. You guys, that's what I have for this video. Let me know, is a no income doc DSCR loan worth it? You guys drop me some comments below, and if you guys have any questions, by all means, my information is in my bio. Keep in mind with this mortgage or other mortgage products or real estate investing, everyone's scenario is different. So make sure you crunch your numbers and do what's best for you, so you don't miss an opportunity and so you don't go into something that's not a good opportunity. So that's all I have. And make sure you guys hit the like button, hit the subscribe button, and I'll see you in the next video.